Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is a 4-hour chart of gold. And yes, we saw a massive red candle during the closing time of Friday. Ultimately, gold settled at the support level we have been talking about for the last 4 or 5 days and ultimately closed at 1644. This is the last traded price of gold. So let's try to understand what are the important levels for Monday. But before I proceed with the levels, I would like to show you the chart of DXY. See, during the last closing hours of DXY, we saw some kind of recovery. Okay, and as we have been talking about the level of 113 here, 113.6070. So this level will be very important. In case DXY shows more upside, okay, then obviously gold USD, Euro USD, GBP USD, all pairs will be under pressure again. But in this case, especially in the case of gold, the most important role was played by US government 10-year government bonds, and you can see just the opposite of the gold chart. Here we have a massive green candle, and if you observe the chart carefully, then we can see that overall the bond market was in it's extremely bullish. Here we have some kind of resistance, okay, but ultimately it crossed the resistance level on Friday and ultimately close above it. Okay, so this is something huge for the market. So the market opening will be very important on Monday. After the market opening, if we see that market is sustaining above this level here, so then we will get the confirmation that okay, the previous resistance is gone and market will be taking support at the previous resistance and market will be going up. If this thing happens, if market takes support here and starts going up from here, then obviously we will see further downside on the chart of gold. And as we all know that global sentiment is not very positive. Experts are thinking, are telling that gold will be seeing the levels of 1600, 1580 very soon. So my dear friend, if you're a swing trader, positional trader, it's better to be on the sale side, okay, considering the present market sentiment, okay. But if you're a day trader, scalper, then that's a different chapter. So on Monday, keep a close eye on the bond chart. If market takes support and bounces from here, starts going up from here, then obviously you should be considering taking a sell position. But in case market goes down again, okay, if we see few red candles and market correcting again, okay, then obviously we will see some upside or recovery on the chart of gold. Okay, we will have to take the decision accordingly. Now let's look at the chart of gold now. Okay, as you can see that I have got 3 lines, so let's try to understand each level step by step. Okay, so first of all 1640 to 44 level, okay, that we have been discussing for the last week. Okay, this level is very important because this was the last support for the market in this present chart right now. Okay, and in case the selling pressure continues, if you see a big green candle on the bond chart, then obviously market will be under pressure again. So if you see gold breaking the level of 1639, listen to me carefully. If you see gold breaking the level of 1639, okay, then observe the size of the candle, because for a proper breakout, okay, the volume is extremely important, because in market we have a concept called false breakout. Probably you all have faced the problem. Okay, sometimes you think that there's a breakout, but after some time you see price being rejected and you end up losing money. This is because of false breakout. False breakout is a big problem in the market. Okay, so to save yourself from false breakout, okay, you need to watch the volume. Okay, so in this case, if you see market has crossed the level of 1639 with good amount of volume, means the size of the candle is good, big enough, okay, then you can take a sell position. And for additional confirmation, look at the chart of US government 10-year bonds. Okay, so if you see that bond is going up, gold is going down, then yes, you can consider taking a sell position. Okay, and if you're wondering about a target, then right now we don't have any target, but in this market condition, I think that at least you should achieve a target of 80 to 100 pips. Okay, if not 80 to 100 pips, at least 60 to 70 pips is minimum, I think so. Okay, so this is strategy number one. After the market opening, if you see gold breaking the level of 1639, then yes, you can take a sell position if volume is present. So this is the first strategy for you. After the market opening, if you see market going up, okay, if you see market going up from here, so you can take a sell. You can take a sell on rise, because overall the market sentiment is bearish. If there are 100 traders present in the market right now, then 70 traders are on the sell side and only 30 traders are on the buy side. So it's better to follow the trend of the market. Okay, so in this condition, if market goes up after the market opening, if you see market going up, okay, in that case 1661 will be another level. If you remember correctly, then 1661 was the previous support for the market. Okay, it was more or less an important support for the market. So the previous support will now be acting as the new resistance. Okay, and you can also see that we have Fibonacci 23.6% retracement level also. So yes, if market goes up, if you see sudden up move on the market of gold, then observe the market around 1661. Once market hits the level 1661, just see how the price is doing. Okay, if you see that as per our expectation, market is struggling near 1660, 1661. If you see price is being rejected from above, market forming shooting star kind of a pattern, then you can take a sell position. But yes, I would like to remind you again, do not take a blind sell position. After all, it's your hard-earned money. Do not gamble with your hard-earned money and capital. Okay, no level is permanent in the market, so being a trader, you should observe the market at the level. Okay, once you are convinced that okay, this level looks good, then only you should click on the buy and sell button. Okay, so if you see market reversing from 1660, 1661, then only take a sell position. Okay, so if market breaks this level, you can go for a sell position, and in case market shows some recovery and reverses from 1660, 1661 to 61 level, you can also take a sell position. Okay, in between these two lines, you can see I have drawn another line here. Okay, this line is not that important. Okay, I would like to tell you again, this line is not that important. Okay, so in this market condition, according to my analysis or my opinion, is that these two are the only reliable levels. Okay, but still I have drawn a line in the middle. Okay, there is a low chance, that if market shows volatility, so less volatility, if the market remains dull, market remains flat, agar market ekdam lull rahta, okay, in that case we can expect the market to reverse from 1650 as well. 1650 may act as resistance if the market remains dull and silent on Monday. So it depends on the volatility, and most importantly, the market opening will be very, very important. Okay, let's wait and watch. And as I always say, do not gamble with hard-earned money. This is my analysis. I'm a trader. No trader is 100% accurate. So please follow proper risk management. Please. Bye-bye. Take care.